Welcome everybody to another 144 Analytics video where we take you through how to use the Fibonacci retracements based on our rules and guidelines. First off, we'll start with what we call the golden rule, and that's the 38.2% level. And that is any market that is going to keep its current trend must hold 38.2%. As long as it does, the trend will continue and it should make new highs or lows from that retracement. Our second retracement, 61.8%. Whenever the market holds 61.8% of a move, look for it to go 61.8% of where it just came from. This usually happens when a market is directionless or in a consolidation period. The 23.6% rule. Extremely strong, weak markets will only go 23.6%. This is typically a runaway market. Our last one is 78.6 rule. Any market that hits 78.6 should go 78.6 back the other way. This is also where a lot of bull markets end and start, and a lot of wild swings can happen. So having those four basic rules, we're going to go take a look now at some of the cryptocurrencies that are just below Bitcoin and Ethereum. Again, another thing is all of these rules and guidelines are on our website. You can get them for free there with examples of how to use all these things and how it's played out in markets. And each of our posts every other day or every day will also flow with these same ideas of how to use the Fibonacci retracements in each market we update. So we'll start with Litecoin here, and if we just go back, we just follow the 38% rule. This is the move up so far this year, and you can see back in January, this level held 38% of what was the all-time high at that time and the low. New highs happened, as should. Next setback, 38.2% again. New highs, as should happen. 38.2% again. I'm putting all these markers on here for you because if I started putting all the lines and retracements on here, you'd see nothing but that. And I want to make it as clear as possible what's going on here. We hit the all-time high, and this is where the market started to turn. They didn't hold 38% for the first time and started holding 38% back up. Now, this is all quick, and this would play out on an hourly chart, making more sense, but this setback right here, or the rally back, went right to 38%, telling you the direction is changing. Again, a one-day break and a one-day rally, 38.2%. By the time this is all said and done, we go to 78.6% all-time high, all-time low. Going back to our rule, what's our target? 78.6 of where we came from. So that's, whoops, sorry about that. That is here to here, and this long-term target would be 348 just based on the 78.6 rule. Now, as you'll find in all of our updates and everything, we always say, regardless of what the long-term target is, you have to weigh the market and watch all the retracements regardless of what that long-term target is. So we are rallying from 78.6. Where do we go? 38.2. That became the long-term swing point. And what we should be expecting from this is a subset after that 78.6% rule is for the market to go to new lows because we did hold at 38.2%. So the market comes down and it doesn't make the new low. Now, there's a couple things that we have to remember with the 38% rule. And the subset to that is that any market that goes 38% and doesn't make a new low and or makes a slightly lower low and gets right back in the range should go 61.8%. We'll get to that in a minute, but here we can just weigh this in a smaller amount. If this trend is going to continue, it should stay under 38%. here you go. You hit 38%. You're trading up above it. But then where does it break? It comes right back. It's so minute here, but still it's important because all it did was go 38.2% back. Again, we go up to 78.6. Our target would have been back to 78.6 of this move. But as we say, we watch all of the retracements, and this one holds 38, telling us there is a trend intact, and that then we can look for what was that 61.8% target based on the fact that the 38% retracement did not make the new low. We are now looking for 61.8%. So this week we did hit 61.8%. So where are we now? Well, 61.8% should send us 61.8 the other way. So longer term, we could still be looking at 176 on the downside. And as always, we'll watch all of the retracements on this current move. And so right now, this is 23.6% of this whole move up so far. If that's all it can do, we know the market's in an extremely strong situation and that more could come on the upside. And then that would bring us back to the 78.6 target that would complete the 78.6 to 78.6. Now, this whole trend will stay intact until 38.2% gets taken out. That's our golden rule. And even though we are looking for 61 off of this perfectly hit 61.8 up here. So there you have what we're looking at in Litecoin. Markets has hit some overhead, big resistance. And if this comes down to 61.8, again, you can just be caught into one of those ranges where it just goes 61.8 back and forth, which you will see in our next example in Ripple. So we'll go to that one right now. Where are we at here? Nope, that's Cardano. Ripple. So we look at what's happening here, and we'll start out with what this market hit up here. And again, 78.6%. As we said, this is a level that can end a lot of bull runs and start. So if we just take that 78.6 should send you 78.6 the other way. We accomplished that right in here. And again, this movement in here is so small or happens so fast, but this was just like 38% back up. And the market goes to new lows again. You'd have to take a look at these things even on the 1 minute because they move so fast as to see what's happening internally here. So this 78% takes us to this one and more. The first rally back can't even get 38%, telling us the trend is still very negative. But where do we go? 78.6 of the all-time high and the low. Now again, this is where our long-term target is going to be 78.6 the other way. That's up here, call it 1.65. From this, we put this out back in June when this low was hit. You can check that on our website. We put that out as plain as day. That was our target based on our basic rules that we are explaining here. A lot more happened in here on this way. So what happens? We just start looking at 23%. It's so minor, but that's how strong this market was. Then we hit 38% of this whole move, which was our long-term swing point, and the setback can only go 23%. So just explaining to you how strong the market is. Finally, we get up to exactly 61.8% of this whole move. Now, long-term target still 78.6, but we have to look at all of the retracements on any move to see just how weak or strong a market is. Now, 61.8 should be sending us 61.8 based on our rules. And sure enough, where did it go? 61.8. We had a hesitation here at 38%, and but ends up going to 61.8. 61.8 should send us to 61.8. And this is, again, where we say this is the area that can get into congestion back and forth, 61. It's kind of a directionless market. Again, that 61.8 went to 61.8 again. And that 61.8 finally got him out of the 61.8s, but it hit 78.6, traded above it. The close is always the most important thing. Right now, we're sitting at 38%. Target from this 78 should take us to this 78, which is down around 95 cents. If this is all that it can do is 38%, it's telling you that the market is starting to get a trend going again by holding the 38%. And if that is indeed true, then we're looking for our long-term target, 78.6, as our target from back in June. Okay, now we'll go to Cardano. Was show even something that doesn't have a tremendous history in it. Still, it just applies to the same basic rules, all the same, as we believe it's the underlying structure of all markets, cryptocurrencies, grains, stock market, doesn't matter, stocks, everything. So we'll just go back here with this run into this year with Cardano. What did it do? But it goes 38.2% back in here before it goes on to these new all-time highs. The retracement on the way back here, where are we at? Okay, sets back here. Didn't get to 61.8 on this break, but the rally goes to 61.8. We're looking for 61.8 the other way. That's what we get here. Again, 61.8 should send us 61.8 the other way, and that's exactly what it did here to here, was right here. Now again, as fast as these markets move, it was a one-day setback, but that one-day setback took you right into 23% of this move, telling us we've got not only a trend, but an extremely powerful one because of holding 23%. What happens? We get through 61.8. The first setback after that comes right back to 23.6% again. And on to the highs, and here we go again, 23.6%. Make a slightly higher high. Never a good sign, and getting right back under the old high. As we mentioned, the same thing with 38.2 is 23.6. So that told us look for 38%. 38, you can see they spiked down below it a couple times here, but the base, they never closed below it. And then even in here, there's retracements that you'd have to go into the hourly to find out. I'm trying to stick to the bigger things just to give you a little vision of how to use these things. So we come down here, 38, all-time high, all-time low. That's where it comes from, the all-time high. Right in here, 38%, still our long-term swing point, the golden rule. Any market that's going to continue going higher needs to hold that. Now, where does that go? 38 back up. Again, just because new all-time highs was the target, we don't ignore all the other retracements. So this should have sent us into new lows. It did, but slightly, but still held 38.2 on a closing basis. And if that's the case, then we should be looking for 61.8 the other way, which is up here at 266. Now, the rally from there, again, got stopped with the new low, 38.2% of here. And we are caught between these two. Obviously, this is the more important because it's a longer-term swing point. Holding this still should send us to new all-time highs, and because of what played out here, a slightly lower low should still be able to send us back to the 61.8. Any failure to take or to hold that 38.2, 61.8 becomes our target. I hope this helps you in understanding, as we feel, this is the underlying structure of all markets, and with a few basic rules can give you a feel for the market, let you know what the trend really is, how strong or how weak the trend is. And as we've said, all of these examples are done daily on our website for free. And we want to thank barchart.com for all of these charts. And we hope this has been helpful to you. Please, if you like it, give us a thumbs up, subscribe, and check out our website. Thanks again.